Hello, this is Mandy Correa, broker, associate, mentor, and trainer with W Real Estate. And today we are going to talk about the different types of insurance in real estate, especially. It can all be very confusing. So there's different types. There's fire insurance, there's title insurance, there's PMI, and home warranties. So all a little different, and all will be used in one way or another, but all terms you should know when you are looking to purchase or sell a home. So first of all, fire insurance. Fire insurance is another hazard insurance or homeowner's insurance, kind of go hand in hand. It's basically insurance on your home in case there's a fire. Sometimes insurance policies will have additional supplements that cover interior and extras. So basic fire insurance or hazard insurance or homeowners insurance is replacement cost. It's if your house burns down, it will what it's cost to build it and some of your contents inside. Now, if you're in a flood zone or an earthquake zone, and maybe your home or you want to have that extra insurance, then you would purchase an additional earthquake policy or an additional flood policy. Now, earthquakes, there's not too many lenders that require earthquake. It's more of how you feel for your home, because in California, you could be on a fault line. When it comes to flood insurance, if you are in the FEMA 100-year flood zone, most lenders will require flood insurance, and it's an additional cost. And it's almost the same amount of cost, or can be half or up to what an insurance premium would cost you. So again, those are things that your lender and your real estate agent will keep you on track with. So if you're at the top of your budget and they've kind of pre-approved you for a home for A, B, C, and D, and then you find out it's in a flood zone, there's a good chance that that could put you over the edge on your debt to income ratio. And again, that's something we'll talk about later. Today it's insurance. The next type of insurance is title insurance. So every purchase that we do goes through an escrow and title company. And that's the third person, middleman, who handles the monies and all the transfers from the seller to the buyer and so forth. Title insurance, though, is part of the cost of an escrow fees, because that's how they clear title. For instance, you buy a house, it's in Jane Doe's name, you purchase it, title will clear her and her liens, and then add you and your liens on for the new purchase once it closes, and then that's your liens. Now, that's a clear title. It seems like it should be easy. No, it's not, because if you have an older property, especially maybe an old farmhouse, it's been in the records for hundreds of years, which there are those homes. Title insurance was put in place to kind of protect you from way back when, that somebody's aunt owned this home and it should have been left to her, and over the years supposedly a will burned or something, and you can't, she promised it, she had a hand note. Anyway, all these different excuses could actually happen. Don't see it too much anymore, but it does still happen. And title insurance basically covers you from long lost niece coming and trying to take your home. And that's what title insurance is for. There's an owner's policy. So pretty much everybody who does a transaction will get an owner's policy. And then there's a Alta Policy. This is a lender policy. So this is additionals, and a lender will require it. Again, not a lot of things you have to worry per se about, and your lender and your realtor will keep you on track for that. But there's still terms you need to kind of be aware of. Again, more definitions. The next type of insurance is PMI, which is private mortgage insurance. This is required whenever a borrower does not put down 20%. Anything less than 20% requires PMI. It is the lender's backing to insure, or at least cover, their losses in the event you do default. So the riskier the loan, the least amount of down payment makes for a riskier loan. And this is how these lenders protect themselves. It doesn't mean that you could default and just take it from my funds and now I'm back on track. No, that's not what it means. It's kind of one of those things that if you did default and your home did foreclose and it's gone, they've got this little cushion to kind of make up for a little bit of the difference that you incurred in your loss. And then the next one is really not insurance, it's more of home warranty. And that's kind of like a car. car, you get a car and you get this bumper to bumper. Not quite the same thing, but it's a warranty that's for 1 year. Usually it's put in place at the beginning. It'll cover your appliances, the heater, your AC, maybe a small leak in the toilet or a clog, things like that. So each policy is a little different. For the most part, it'll cover most of the items that I just said. Could be additional cost if you wanted it for a septic, if you wanted it for your well, if you wanted it for a roof. There's just different levels of what you may want on there, and of course the cost. An average home warranty is about $500, and most buyers do purchase that or get one purchased for them when they purchase a home, because you could get a home inspection and everything works in the summertime. Heater turns on, everything's great, but then come winter, you run it for a long period of time and it dies. So that's what that is for. So there you go, the different types of insurance. We've got homeowners insurance, which is also hazard or fire. We have supplements to that, which you can add on, which would be earthquake or flood. We have title insurance. That's going to be done at escrow. An owner's policy or an Alta for the lender. Again, that covers any old liens, old buyers coming back and saying that was my house given to me 100 years ago. Nope, that'll be covered. And then we have PMI, which is your private mortgage insurance. And that's going to be an additional insured with your lender that safeguards them from default from you when you don't put enough money down. That kind of helps secure their position. If you put 20% down, though, you don't have to have that. Okay, stay tuned for more, and follow me on my website or my blog if you want to find out a little bit more about these different insurances.